Hello everyone, in this video I would like to show you this trade I had on the 1st of August. So I'm going to post a few trades that I had in the month of August, and slowly we are going to get to real-time trades. And I'm always going to post the trade after it happened, so probably one day after it happened. I do not post live trades or any kind of signal or advice. I'm going to post just analysis so you can also backtest those. And hopefully this will help you put together your system. So here we had this trade that happened at London, so I like to enter trades at London. This starts in the morning where I live right now, and if I get a trade at London I usually finish the day before 12 o'clock, so after that I just manage everything on my phone with alarms and everything. So this was a perfect 3.6 risk to reward ratio. There was some risk around here, but I really like the overall framing. So let's start from the higher time frame, from the daily time frame, to see what helped me to frame this trade. So on the higher time frame, here we have the weekly order block mean threshold. So if you go on the weekly chart, this is the weekly order block that the price reacted to. So I'm using the mean threshold here to see how it reacts to the mean threshold and if it closes above the mean threshold or not. Before that I had only the open of the order block. Here I have the buy side liquidity because this can be the next draw liquidity, but only that it didn't happen. The price reacted very well to the order block. So I have this line here. Here we have the daily chart. I had a trade here reacting to the weekly order block mean threshold. So maybe I'm also going to do a video on those trades here because there were multiple trades going down like that. Now I'm trading after I had this confirmation that the price is bearish here, and I was waiting for a reaction onto something. I also had a trade in here because I was just waiting for the price to go to at least equilibrium on this price leg that it formed here on the daily chart. So you can see that we have here a confluence. So we have this fair value gap that formed here. We have the daily order block here, and we also have price going above the equilibrium. So I'm not going to put the equilibrium on my chart, but I can already see that middle of the fair value gap and the order block are above the 50% level. So I like this confluence. If I get a reaction here, this was my thinking, I'm going to trade this. So I'm going to delete this, and of course I have to see where price is going to go. So price reacted very well here with one single candle trading down, and I can see it here slightly closing below this swing low. So this is a break in market structure here. The price retraces after that. So in here I was right now at the beginning of August looking for an entry, because in this moment the draw on liquidity it's below here, and I also have the daily order block with the mean threshold. So I have a confluence here of draw on liquidity. Of course, before we get here we have a lot of other price points where price is going to go. So let's go deeper in here. Price reacted real nice here, it dropped down. You can see that we clearly had a break in market structure here. Can be seen better on a 4-hour time frame and also on the 1-hour time frame. On the 4-hour time frame I would just like to show this fair value gap here. So this is the fair value gap that can be closed while price slightly trades above the equilibrium. If price here would continue to go up without showing any signs that it wants to trade down, then I would start looking at this fair value gap, but it would be lower and lower probability if it would do that. I really wanted to the price to react here, and we also have here a breaker block. So we can see what nice confluence we have here with the 50% equilibrium. For now I'm going to delete this. It coincides with the high of the fair value gap, 50% equilibrium, and touch on the breaker block. So this is a very nice confluence. On the 1-hour chart it's kind of the same. We kind of see the same things. In this day here we had the price going up. So here I had a trade, maybe I'll put this in a video. So I had a buy here because I knew the price it's in a deep discount, so it has to go up no matter what. So this price is going to go up to equilibrium even if it's going to continue to trade up, or even if it's going to start trading down again. So I've been looking here for an entry and it was a pretty nice trade. After that we have consolidation on Monday here, consolidation. So usually if I don't like how Mondays look, I don't even look at them anymore. So I didn't look at this Monday anymore. I start to look in the evening to prepare for the next day. Next day in the morning I see those moves here at the Asian session. So now let's go on the 5 minutes time frame. So this is the entry time frame. This is the consolidation that we have for 1 day and a half. So price here has touched the breaker block, has filled in the fair value gap, worked inside the fair value gap. Then it's you see it's on the lower side of the fair value gap around here. So as long as it stays under the breaker, I'm okay with that. Then price continues to go down out of the fair value gap at the New York afternoon session here and the London close, and it leaves behind this fair value gap. So I think this was a 1 hour fair value gap if I remember well. Yeah, so it's a 1 hour fair value gap. Price goes up to touch the fair value gap and then it continues to make lower lows. So now I have an Asian session that doesn't have a consolidation, so it actually has a price leg. And if I still believe that the price is going to go down, at the London session I just want price to go up and to react to the premium PD arrays. So I see the price reacting to this 1 hour fair value gap, and I like that. So I don't see it going through it. I wouldn't like to see that it goes through it, then it finds support at the middle of the fair value gap or at the top, and it continues to go up. This means that it would go for the buy side liquidity here. So that wouldn't make sense because the price worked a lot here. So it took those two equal highs here, it went down, it broke a swing low, then it went up again, then it went down again. So it did a lot of work around here. So now, because I'm confident that the price is going to go down, at the London session I want to go in above the opening price. So here we have the opening price, this dashed gray line that you can see here. So when London opens, price immediately goes up. So I like to see that. Then it goes down. So I have here the fair value gap, and I also have the Asian high, which I'm going to take in consideration. I want to see what price does with the Asian high. So this red line here that coincides with the low of the fair value gap is the Asian high. Price goes up again, it takes out this high here and it just taps the Asian high. So if I look here, 389, and this one it's 388. So just one pipette below that high, but it takes out this high, takes out this high here. And also Asia, it's not a consolidation. So if Asia it's a consolidation, I like to see the price take that consolidation and then continue to go down. But in this case, many times it doesn't have any reason to go up. So the work is done around here. Price has touched the fair value gap here. You see how quickly it formed the fair value gap here and then goes and touch it. So this is a institutional order flow entry drill for Asia, and then it goes up. So it touches this fair value gap. Price drops down at the London session. So this is displacement. We have here break-in market structure that I noted with this orange line. So seeing this, I entered here, measuring like above the 50% level of this price leg, and I positioned the stop loss above this swing high here. So I usually do position my stop loss like 3 to 5 pips above the swing high that I'm choosing. So this was the risk, because normally I should have position the stop loss above this fair value gap here. So this would have been like a more secure trade in case the price wants to go inside this fair value gap here. So I entered here, the price went down right before London closes. It creates another break in market structure. I see the price going up and then it reacts by going down, and I like that. I like the fact that it doesn't continue to go up. You see like price here, it's like falling. So it's something holding here very well. So by now I can see very well how price traded above the opening price. After London session has finished, it continued to trade above the opening price, and by the time New York started, the price already goes down. Now I'm looking for targets. So I started to move the stop loss above this high here. Then I moved the stop loss to break even. And I have a pretty good confirmation on the dollar index for this trade, and that's why I was confident to keep this low here as my take profits. So this is where I took profits. And of course I was looking to touch this before 8:30 a.m. So this is 8:30 a.m. So when I seen price touching here, it was 8:20 a.m. I closed 80% of the trade and I left the stop loss at break even here to see what New York is going to do. So then I've seen this at 10 o'clock. It was just a wick, nothing more. It's pretty far away from my entry. So watching the price react like this to this price leg, it doesn't even touch equilibrium and it continues to go down and breaks this low. So I like that. Here is the hourly chart. So this was the take profit number 1. Then we have this reaction at New York. I left the stop loss at break even. The next day I see the price going up like that, and then at Asia it went down. So that's when I moved the stop loss here above this swing high, because if London is going to break this, I'm not going to like it, so I want to be out anyway. But London just makes a retracement, it doesn't break it and continues to proceed downwards. So I was looking at this one for the draw on liquidity, and here Thursday I see this consolidation, price continues to go down, so I like that at London. But I'm also cautious because usually when London goes down so much, something is going to happen. So I paid attention what price it's going to do here after it stopped like that. So I'm looking what it's doing here. So let's go zoom in on the 5 minutes time frame. So in here, London, it was going very well. We have this aggressive price action here, but it didn't have like a low or something to attack here. So after that I see reacting like that, it breaks the swing high, breaks a swing high again, so it comes down. It doesn't make another lower low, but it makes a higher high again. So I'm watching this at New York. So I'm thinking, okay, when this goes below 50%, because it has to retrace before it goes up again. So here in this consolidation I closed the trade, and of course it continued to go up and kept on going up. So let me put a line here just to show where I closed the runner. Let's go on the 1 hour chart. So this is where I closed the runner because I didn't like it anymore, and the runner was 9 risk to reward ratio. It wasn't a big position, but it was equal with the 3 Rs that I made with take profit 1. So it really increased the winnings of the total trade. So this was a trade that I took in a chain with other movements and trades that I have around here. So I was very connected to what's going on here on the GU after it had a bearish reaction to this weekly order block mean threshold, and it started to go down, and the dollar had some target upwards. So I was thinking there's going to be a lot of bearish trades. There are going to be, and the bullish trades, they're only going to be when the price goes up to equilibrium again. So I know this seems like a lot of analysis, but this is analysis that was already on the chart from past trades and days, and they all added up to this specific trade here. So this is how you trade smart money concepts. You need to go in every day, and even if you don't take trades, you just look at what's going on, and if something changes in your analysis, until the day comes, you'll have a displacement, you'll have a consolidation or something, so you'll be able to take a trade. So I hope you like this, and in the next video I'm going to present the next trade that happened after this one.